How's everyone doing? What's happening? What's good? How's everyone doing? We're just getting everything set up there. So wait for a couple more people to join before we run through treasuries. I've got an epiphany for everyone for treasuries today. You guys can let me know how your session's been. We've got some groundbreaking stuff to report in treasuries today. You just had to buy. Just buy any of them. No, I had a look just after factory orders came out. I wasn't going to trade, especially with NFP and stuff happening. But just as it came out, extremely extended, I think we had just pulled back and we were just retesting. I'll join in here so you can see it, but we were just retesting this level just before just after factory orders came out. In essence, we bought and we took 10 ticks, chilled for another hour, and then we bought the pullback on the 30-year and we took 2 ticks on that. So that is pretty much the session. Nice one actually. We took 10 tickaroos on the 10-year, but bonds at the moment is you just need to buy. To be honest, I mean it's literally straight line stuff. What's happening, you know? So yeah, that is my infinite wisdom for you in treasuries. Just click the buy button. It kind of looks like they're absolutely hammering the yield at the moment. So yields are just dropping off a cliff across the board. Um, and I think investment banks are kind of they can really put pressure on the Fed with the debt markets. You know, see if they can get a bit of a more aggressive basis point cut in September. So some of the larger investment banks are now pricing in that the Fed can potentially cut before the meeting as a surprise cut, which is crazy. So crazy times. I'm going to jump in and show you this. Let me go to Trading View. Go here. And I'll show you what I mean. Look at this. This is crazy. This is what I mean. So obviously this is inverse. We now have the 2-year no longer inverted to the 30s. So we need the 2-year to basically get below the 5, and then we have a normal curve happening. But you can see this is just absolutely dropping off a cliff, which means bonds are the opposite to this, the inverted. So that's essentially why I'm saying you're not, I wouldn't really be fading this, to be honest. But yeah, let's jump into some action-packed indices. We were discussing this. Let's bring this up full screen so you guys can see. It's just sort of whack now. We were discussing this level yesterday that if they do take this out, they actually took it out in the overnight. and then the NFP came out and it's just absolutely shit itself the whole day. So, I mean, if these Mag 7s continue to bleed, it's just going to be abomination to the downside, right? When you look at this, but we were saying yesterday, um, the fact that we dropped this far, we'd basically repaired the settlement price, this big gap that happened here. And buyers, if they were to regain, would have to, in essence, try and break through this higher volume consolidation area. But we spent a number of days, so there's a lot of value built up in here, and absolutely nothing to the downside, and then we're just capitulated. AMU is on SSR now. What do you mean by that, Piggy boy? And how are you doing, dude? What's happening? So let's go back and see. Right, okay. Yeah, I mean, crazy. Not really that crazy, to be honest. What am I saying? This is expected, right? You can't have the stock market continually pump on 7 stocks. It has to cool off, right? Nice, you had a good day, dude. That's what I like to hear. How's everyone else doing? I see eight others lurking. Let me know how you're doing. Absolutely no volume here, to be honest. It's kind of about watching paint dry. Jengi, hello, hello. Yeah. How long have you been training for, Pig? Let's clear these DOMs. I was just about to clear NQ, but there's no. You had a good day today, dude. Nice, nice. You traded ES and micro NQ. Nicely done. Let's see how the market behaves at this with this 650. If it's going to be real, is it going to take it or not? Let's get the pen out. Nice. It's still relatively early in the career, dudes, but it's nice that you're on a good way, man. So well done for that. Certainly sound like you're doing better than I did in my first couple of years of trading. I missed that. Did that 650 pull? Did anyone catch that? I was too busy messing about with the pen. What I was going to say is you can see that they're sweeping these prices, right? So they're pulling in between here. There's absorption here and absorption here. How did you do, Jengi? I take it you were just short on both, I'm assuming? You weren't trying to catch any knife plays? Yeah, let me know what's happening. When some more people join, I think we're going to address some of the bullshit that we've seen in by some order flow creators. Short ES and then scalp some longs and MNQ. Nice. Yeah, good idea for NQ to do that. Is it, you know, gives you slightly more opportunities for scalps, I would say. Jerry Ellis success. Then it was death by 1,000 cuts for a good while. Then basically, nicely done, dude. Yeah, it takes a while. I think realistically, you need to make sure that you're always in the game. That's the number one thing. So you need to control risk and make sure that you're controlling it properly. That's really it. Because a lot of the time, people that start, they're not in the game for more than 3 to 4 months. They just end up nuking their accounts. People can't even keep a prop account, to be honest. No, I don't think so either. I mean, definitely not. Oh, 100%, mate. 100%. I mean, the thing was moving like 10 points when you were sneezing, you know? It's crazy. Let's see if we're probably going to try and fill out this area here. You know, fill out here roughly about VWAP, this sort of area. I mean, just cannot see on a Friday that we take out this low and continue down. Could be wrong. If there's like 50 billion selling balance or something that comes in. Something ridiculous. You need the balls of steel to be trading NQ minis, to be honest. Some people that can trade like 10 NQ and stuff, it's crazy. So what actual individual stocks did you trade today, Pig? Yeah, it's extremely volatile. It's probably one of the most volatile asset classes there is, I would say. I mean, look at the book. This is NQ year, right? So look at the bids and the offer. There's just nothing there. If someone was to come in and hit 50 contracts, it would take it like 10 ticks. It's extremely volatile. The thinner a book is, the more volatile it is. That's just how it is. That's why bonds don't. Well, I'm not going to say they don't move, but they don't. They're not putting in these crazy days. They're moving like 400 ticks a day and stuff. Like a really volatile day would be, I don't know, 60, 70 ticks or something. Like that's extremely volatile in bonds. Your average is like 40. So Amazon, Apple, what's CLSK and what's MU? What are the tickers for that? PLTR. No, so are you talking about NQ pig? A tick on NQ, which is yeah, is 25, 0.25, and it's $5 a tick. Yeah. Okay, nice. I would have never known that. Did I take it? You know, just they popped up in your scanner. I take it. Yeah, so a micro is a tenth, so it's 50 cents a tick. Uh, is a fiver in NQ for a tick, and then ES is 12.50 a tick. Micro is 125, one spot 25. Oh, you regularly trade there, nice, very nice. And in treasuries, you are uh, 10-year is 15.65 a tick. Right, the 30-year and the ultra is 31.25. It kind of works like if you start at 31.25, then half of that for the tens, then half of that for the fives and the two. Oh, you don't use any form of fundamentals? No. Yeah, I tend to use quite a bit. I pay attention to what the data's coming out, to be honest. But I mean, I would say at the moment it doesn't, it's not rocket science to realize that the Fed is cutting on a cutting or easing cycle. So for my markets that I trade, uh, in essence, they go up when that happens. No, there's, I think there's a micro, I think there's a micro 10-year. I think it's micro ultra 10-year. I think. Um, I think I don't trade them in micros, to be honest. I think with like one contract being 15 bucks a tick, it's sufficient. 4 or 5 ticks is like 100. You know. Well, I say though, it's you need to have a fair whack in your account, and the margin's not as you need a bit more margin to trade treasuries. But there is, I'm pretty sure there's a micro. I need to double check that. I think there's a micro ultra 10-year or something. MTN or something. Could be wrong. But no, I don't think there's not any other micro. There's not like a micro 30-year or a micro ultra or anything. Oh, really? There is? Wow. Is there any volume in that though? What's the MWN is micro ultra? I didn't know that, Trader Boy. Let me see that. I'm actually curious. Do you know the is that the is it in the Chicago Board of Trade? Is it MWN? It'll be the same contract, right? Ah, okay, found it on Trading View. Okay. Um, hmm. I'm curious actually. Let me go to chart settings here. In fact, now let's do it on Treasuries. You've got me curious. I don't think there is. I think that might just be Trading View, kind of slightly doing its Trading View thing. So if I go to chart settings and then go to uh, here, so there's the Ultra 10-year, it's a TN. There's the Micro Dow. There's a 2-year, 30-day fund rate, 10-year, 5-year. Maybe slightly more on Teton in the other instance. There we go, micro 10-year yield. Curious. I want to see what the liquidity's like in this. Um, let's see. Fact. Yeah, okay, that's fine. What is this again? The micro 10-year yield futures. This completely defeats the purpose, I think, of treasuries. This. Um, I want to see how this moves. Hey mate, I'll answer that in a wee second for you, dudes. I'll need to remember here and change this back. Let me copy this. And I had the ZB there, right? Well, a second, I change this back, dude, and then I'll answer your question. There we go. Yes, I think the micro contracts on treasuries almost makes it, you know, pointless, to be honest. So you're asking, how would you approach a large resting order at a level you're interested in entering? I suppose, you need to know more context behind that. Um, my honest answer is, nah, we need to know more context. I wouldn't say, but generally speaking, if you have a large order at a level, right? And it depends what size it is, but if it's a huge order, the market seeks out liquidity, so it will fill out orders. That's what it does. So you want to see, say for example, you're looking to sell a level, right? And you need to know a lot more context because it's hard just to, say you're looking to sell. You need to know what day type it is. Is there any data in the calendar coming out? What's delta like for the day? Is limit orders in control? Is aggressive orders in control? So generally speaking, if you've got those things in your favor, okay, and then price comes to that level and it fills out the order, you then want to see how the market reacts. Now, in my opinion, I would not be looking to I would not be looking to enter the position until the market fills out the liquidity. Because here's the thing, um, if the order has just showed up, right? If the order's only been there for a couple of minutes, it can likely be pulled. So if it's been there for a while, then most likely they want filled. So the market's going to fill it out, and then you want to see uh, if it's an iceberg that's behind it. If you take out the iceberg, you were looking to sell, the market continues in your direction after it. But always expect them to fill out the liquidity. I don't think there's any reason why you would front run the orders, to be honest, unless you're looking to take like a tick or something. Does that make sense, dude? So in my opinion, um, so I mean these orders are not real. They're a bracket order that's just following price. They've had this in the book now for, it's coming on like 4 weeks. But say, let me try and screenshot this. Um, all right, there's a hundred lot here. Okay, we'll use this as an example. So say the price is up here and this 100 lot just appears. You would want to see how they fill it out and then basically look to sell in as an example, right? Um, but you just need to take it all into consideration. You don't want to be front running these orders because they can pull it and you're left with your dick in your hands and you'll get filled. You know. Let me know if you get any other questions around that. But you can. It all depends. Like it's hard to answer that. It's hard. But generally speaking, as a rule, is the market seeks liquidity, so it will fill out levels typically. And your job is to determine who's in control at the moment. Is the market net long or net short? Where are people going to puke? What's the context of the day? Are orders being pulled? Are orders been stacked? You know, it's not just as much as like you're looking to sell at something. There's a large order there. You need a lot more context to take a position. That's only one part of it. But a good question though, because a lot of people, I see some people, taking a position because they've got loads below them. For example, they'll buy it because there's loads of liquidity below them. I would say that's a little bit more risky than waiting to fill it and then see how the order flow works for the direction you're looking to trade. But yeah, let me know if you've got any questions around that. I would say the probably the prime example actually is Bookmap. We see liquidity showing up all the time, just a cluster around price, especially with the bracket orders here. So you see the 3150s on the DOM at MBO, and then it's above as well on the offer. Just in case you're not seeing this, I'll highlight it for you. So here, right, well, it just moved, and here, these are not real. These orders have been falling price now for about a month. So you understand what you're saying. Used to front run when I first started consuming the tape, constant. Tend to wait to observe now. Footprint sense when it's filled. Yeah, exactly, mate. That's really it. Front running that is just a recipe for disaster. If it was as easy as that, uh, you know, think just put yourself when you go to take a position. Always put your large trader hat on, right? And think to yourself, what would I do if I was sitting on a desk with thousands of contracts to execute, right? If someone flashes 300 on a DOM and you've got thousands of them to execute, you're going to gobble that shit up, right? Just how it's going to work. The market seeks liquidity, it seeks money. So you don't want to front run that because likely you front run that by a tick, you're they're going to go and fill that, and then you're offside a tick. You want to reduce the risk in the trades, wait till it's filled, uh, See if the order flow is conducive to your trade thesis, and then take it, man. So you're on the right track with that. Anthony, how's it going, dude? Up in the TV. There's me on the big screen. They used to tell me that I thought I'd only ever be on the TV for interference, but here we are. Yes, pig. So we need to discuss some of the stuff. A recent video in there. I've got a bone to pick. Sadly. Sadly, man. Not one for addressing, but you brought it up, not me. The latest video that was posted. Adrian, what's happening? There's always Crime Watch. Yeah, exactly. Yeah. Class. I like it. So we'll see if market on close data when it comes out, if we're going to get some action. Can't really see it on a Friday, to be honest. I think we'll probably either range around here, maybe sweep this high. Here. Sweep this and then come back. Let's draw out the two sweeperoo points. Rectangles. So here and here. These are the two areas where there can be some shenanigans. So they bang it up, get out of their long positions, drive it back into the point of control area. So here you can see, if we draw it, it's kind of like a curve, right? And you can see like this. So this is the bell curve, pretty much. This is where all the volume is carried out here. So if they do a little sweeperoo down here, they'll maybe bang it, and do something like this and take it back in for market on close. And on this side, they'll maybe do something like this, and then bang it back down here. So that's the quick idea of what we think is going to happen. Yes. Sure is, mate. The guy's been advocating order flow for years. The market conditions change, and then he's basically, I don't know, man. We'll see. I don't agree with anything in that video, to be honest. I think the market conditions change. It's not rocket science to see that at the moment the order flow in ES is changed. Like number of years ago it was 1,000 bid and offer. Now you're like less than 10% the size. The markets change, and that's done by the market making firms. Your Citadel, JP Morgan, Goldman, DRW. Your big firms, right? Some new quant comes in, develops a strategy like these bracket orders. This is a specific strategy to distort the book, right? There's no other reason. This is simply here to distort the book. This is not hurting retail because retail doesn't even know what this is, right? This is there to throw off other algorithms so that they can, in essence, spasm out a little bit, right? All you're seeing in this is it's like a massive game of poker. That's all it is, right? And when the markets are thinner, they're fast moving. It's a different strategy to a thicker market. When you're 500-600 bid and offer, or a couple of thousand bid and offer, right? Or in the 10-year where it's 4K bid and offer. Completely different strategy, right? It means it's slightly more aggressive. You need to pay more attention to sweeps. But to say that the order flow across the board is meaningless is wild. And I think when the markets are thinner, you need to pay more attention to delta, because delta simply measures, right? The definition of this is it measures the difference between aggressive market orders to the buy side and aggressive market orders to the sell side. What I mean by the word aggressive is simply market orders, right? So if you've got net positive delta or the market is rising, so you can see here with the little green candle, okay? Simply, we covered this in the whole delta video, but in theory, delta should be following price. You know, if you've got aggressive buyers coming into the market should be going up. If you've got aggressive sellers coming into the market, right, the market should be going down. Pretty straightforward stuff, right? However, when the market is thinner, right, they pull these bids and offers a lot, and you need to pay attention to that. So this is where the delta, this shit here, right, is like part of the jigsaw, and your job is to determine who's in control. You guys must hear me say this shit like every day. Who's in control? Is the aggressive participant in control, i.e. the market orders, is its price following the market orders? Whereas if you're seeing aggressive sell orders come into the market, right? So say you're minus 10k and it's completely flat, right? Then clearly the limit orders are absorbing all of that selling. They're absorbing that in the bid. Okay? Then there becomes puking points, and then you develop a strategy around that. So anyway, I'm rambling on about that, but it's nonsense to say it's the case. You know, someone that's been doing that for years to then come out and say, I've had an epiphany that order flow is useless is ridiculous. Yeah, exactly, McCoo. Thinks so as well, dude. Well, maybe that's why he's got it made, to try and, you know, uh, for someone that has literally, put a lot of good content out. The guy's put out a lot of good content about order flow, you know, and then to come out and basically say, nah, 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 now it's all shit. Like, market conditions change. I agree. Yeah. Why do you think I'm now trading treasuries? It's not a rocket science. You don't need to look at that and see how thin the book is now. This used to be 1,500 bid and offer before COVID. COVID's basically evaporated the liquidity on ES. NQ, I mean, forget about it. NQ's there for correlations. You're not executing on that. Well, it depends why people are buying and selling, surely. How price responds to delta changes. Not really. Not really. It doesn't really depend why. I mean, if you have 5,000 positive delta come in, that means there's 5,000 more aggressive buy orders or market orders that come into the market than sell orders, and they move price. So if you have 5,000 positive delta come in and the market doesn't move, then the offer is absorbed that 5,000, right? So then you need to think to yourself, okay, someone is going to puke that. Someone is going to have to get stopped out in that trade. As we know, trading is a zero-sum game. And there's another thing as well, limit orders or passive orders that you're seeing on the book, right? Here, all this shit here and here, right? Just as a general rule of thumb, do you think large participants are going to be using limit orders, or do you think they're going to be using market orders? Very typically, the limit book is owned by large firms because they've got sophisticated order types that they can do icebergs, you know, they can run all that through with good software they have and APIs. But there can be a host of different reasons as to why people are buying. I mean, these markets are constantly balancing. You know, there's the underlying S&P, okay? There is underlying equities in there. and they constantly have to rebalance, right? And that's the part that I agree with when people say, but the market is constantly arbitraging all the time, right? So if a shit ton of money comes into Apple right now, NQ is going to go bid, and so is ES, right? But there needs to be buying, of course, to come in to do that, and that will reflect because everything is balancing all the time. Yeah, Daniel, NQ is a joke now. Well, exactly. That's the thing. You don't because they are both market orders in their own right. If you had how do we say this? So if delta was zero and you buy, right, you buy one, delta's plus one. If you then sell at market, right, at the same price, it then becomes zero, right? Market orders. Well, put it this way: you're never going to be able, Pig. You're never going to be able to. You're never going to be able to be as quick as algorithms, right? So you're never going to be able to start making a market. Do you know what I mean, or anything along those lines? I mean, so it's really really difficult when markets are this thin. You know, um, completely different strategy to go for really really small amount of ticks. It's extremely volatile at the moment when the VIX is this high. Um, so in general, what we use correlations for, if NQ is at the floor, so is the Russell, and so is the Dow, and so is the ES, right? They're all correlated, and then you see some hard selling coming into Amazon and Apple, right? Some heavy hitting into the bid. You're not going to be buying that, are you? Do you know what I mean? Regardless of the order flow, correlations are a thing. So you, trading, I think there's a lot more that goes on behind the scenes that you need to know, you know, rather than just simply a ladder. You need to understand the context of that session. What's the theme of the session? Because every day is essentially just a variation on a theme, right? There's no day is the same, but there's patterns and behaviors that happen, and you always need to think to yourself, whereabouts can the market go to put the most pressure on the people that have either bought or sold? And what you can see so far today is aggressive amount of selling, some fresh new selling come in, probably some long liquidations as well, right? But the market has had to work extremely hard to get any form of bid going. Yet when selling is coming in, right, the buyers have been hit pretty heavy with it. There's not that much negative selling that has to come in for the price to go down. So in essence, what you can deduce from that is the offer is controlling price, okay? And then when sellers are coming in, there's a little bit more juice been hit. Does that make sense? You can literally just by looking at Delta for the day get an understanding of what's happened and who's in control. David boy, how's it going? Nice. Did you bring any snacks, Dave? What's on the cards? Exactly, mate. Completely agree. I think you need to trade. You need to trade the products that you enjoy and products that suit your personality. You know, completely. Good luck with that, pig. Hopefully it goes well, dude. Drinking more wine, good. Call them outlaws. Class. Dave's got the right idea. Dinner on, some wine. Friday feels. I think I might join you later. Au revoir, dude. That's good law. So do you see what I'm saying here, right? There's a little bit of selling coming in, but the market is taking it quite aggressive. I mean, we've got POC here, so there's going to be some chop around here. So there needs to be a lot more selling to come in, or the bid needs to be pulled. And a lot of this is just experience, you know. Like if 2,000 contracts come in negative and the market's not moving, then clearly the bid is absorbing that. You know what I mean? I just think with that video, I'm not gonna harp on about it, but I just think that video is just absolutely wild, to be honest. Wild behavior, man. To trade order flow for years and then come out and say it's all bullshit and doesn't work, and then bring up some ways that it's honestly crazy. I would like to have a you know I can understand, the reason why you would think that it's harder to go from trading 1,500 or 1,000 or even 500 on the bid and offer on ES to go into 30. It's a completely different market, right? It's different, you know. Yeah, exactly. Yes, exactly, mate. That's it. Being flat is a position. That's the thing, you know. Like, that's the thing you need to understand as well. Being flat is a position itself. Sometimes it's best to sit in cash. You don't need to trade every day. It's actually easier on the life as well. You know, it's easier on the soul. But yeah, tradable. I'm talking about that video, man. I actually don't know if that video is a troll or not. Like, I'm seriously in two minds if it's, I don't know. It's a weird one. Um, Not really one for calling people out and stuff about it. I did comment on the video. I would like to have a chat about that and see. We've got dudes in our community that are absolutely crushing it on ES and NQ. We trade a host of different products and stuff as well. Um, it's not like this sort of secret inner group that we hide behind a paywall and stuff. Do you know what I mean? It's not like I'm saying that to pump a course or something. Well, exactly, mate. But just because the charts are moving and there's volatility, you need to have good. It's better when the ranges are big, but there's more opportunities in terms of sweeps and stuff. And it's been one directional the last couple of days. Um, I don't know if you guys have watched that. One of the crazy parts of it as well, but that video was saying that the underlying market moves the futures market when there's no orders, and then using a Bitcoin chart to show that. I mean, that there's no liquidity in that contract. I mean, literally none. We actually brought that up on stream like, I don't know, 4 weeks ago or something. You know, and we were actually saying, guys, we could probably create a syndicate and bang that about. Do you know what I mean? There was like no volume. There was something like a couple hundred contracts or something traded for the day. You know, so it's just weird. I almost feel like that video is been put out to bait. To be honest, that's what I'm thinking. That's what I'm thinking, man. Well, I actually prefer a market and ranging is another word for just balance, right? So like like this. If you ignore this, this is a range, okay? So you draw the bell curve out, and here it's here. And very typically in a range, you're just fading extremes. You're shorting here, and you're buying here. You're waiting for the order flow to confirm that, but that's pretty much the setup, and you're then riding it back into the range to long side. And then from here, you're riding it back down into the range, you know. And typically, when that happens, the theme is a range, so that's likely to continue until it doesn't. But likely, if it does sweep here, you can take a short, you know, and down here you can take a long. So ranging markets are good, or the other classic, you know, which is just basically, you know, a value play. So you're fading back into the average, or you have the extension of the profile, or which is just a classic break and retest, you know, if you're going with the trend. That's really the only is two strategies, right? You're fading back into the mean, or or going for some sort of trend continuation. That's all trading is. You know, there's about a million different ways you can cut it, but that's what two main strategies are built around, right? What about XAU USD? So that's CFD contract. The futures contract for that is GC. Um, same idea, mate. You know, exact same idea. Really tied to the dollar price. So you know, if the dollar is rising on the day, then very typically gold is going to be going down. Michael, do you mean this one? Between the, what did you say? The column you have set up in ES is between the price levels and the total volume. How to use it? So delta. So I have a hotkey set up where I can just clear this. Um, you know, and it just allows me to see, you know, when hitting into prices, if I'm not paying that much attention, what the net, you know, if it's net negative or net positive delta for that. That's all it is. I clear that quite a lot, to be honest, and it's set to the recent minute. So if I clear it, it'll clear it every minute. Yeah. So I mean, gold. I think what in the last, what would we say now? We're probably approaching. You know, it's been a bit of a tear the last like 12 months, but prior to that, for the last like 5 and 6 years and stuff, it's pretty much been in a massive range, right? It's not really been doing anything. I think a very good thing to take into consideration is wait until the initial balance is set for a session, right? So what happens in the first hour of the cash open? That then gives you your sort of playing ground, and it allows you to see how big the range is going to be for the day, right? And as a general rule, if you're below initial balance low, right, and unless there's any big key levels below that, you're not really going to want to fade it, as a general rule, because you're in price discovery. It can extend. Okay? If, on the contrary, if it's like 3 hours into the session and you're still within the initial balance high and initial balance low, well, you're in balance, right? So then you can just fade the extremes, back into value. Use the order flow as your favor. Typically on those days, the book is going to be thicker anyway, you know. But that's what Jagger's then saying is, you need to. The, trading is very much of a you're predicting the future, right? Same as poker. It's a game of lack of information, and you want to get as much information as possible in the now, and what's happened in the session in order to make the best educated guess. And that educated guess has to be better than a coin flip, otherwise you're just gambling. So if you look at a chart and you don't understand what's going on or you don't see an edge, close the chart. Do you know what I mean? Just because you can see a depth of market here and you can see orders flying around doesn't mean there's an edge. Do you know what I mean? And that's where the problem is. You go onto some streamers or whatever, and they have DOMs up, and they just have them up because they think it looks cool. Do you know? You're not taking it into consideration. That's the trouble. It takes years to get handy at this stuff. Oh, exactly. No one knows where the market's going unless you're the guy that has 10,000 contracts about to press buy. Do you know what I mean? But then they're not pressing buy with 10,000 contracts. They're going to work the book on that. And that's another thing that you need to try and take into consideration as well. If a large trader is offside, he's not just going to liquidate straight away, because if he does, he's going to take the market down with him, or he'll probably take it back up, whatever which way. It depends on what his position is. So that's why they can typically try and buy some more, because they can actually drive the market. So you need to think about it all the time. If you had large amounts of trades to execute, where would you take price? And this is very, very often why markets tend to sweep levels, because it's inflection points in the charts where orders are going to be congregated. You're going to have people stopping out, you're going to have breakout traders entering, you know, loads of orders that sling about these areas, and that allows people or the larger firms to get out of their positions, and then if there is enough volume, they can probably end up being, net the opposite position to then take it back down or back up. Good question, Z. I think you can. I need to actually look into that. But I've got one where, I've got mine set up where it's, control spacebar that clears it. I think there is one you can do to set to clear them all. I've taken away the inside prints. This is actually Jagger's recommendation because let's be serious, NQ, you're not really noticing anything on it anyway. And I just use these for correlation. It keeps the stream deck a little bit tighter. Then I have another key that in essence recenters the DOMs. No, it's typically always the first hour. I'll need to check, but basically, um, I think currency futures. can't remember exactly off the top of my head, but I think they don't. They're not like 9:30. I think they might be like an hour behind that. I think it might be 8:30 or something. You need to double check that. But you're always taking the first hour initial balance if you're trading that. Always take the first hour. Opening times are slightly different, but you take the first hour and then of course you need to factor in is the data coming out that can affect that, right? Another thing as well for the markets that you trade, you should be knowing what is the average daily range. What is that for what you're trading? You should probably even know that on the specific days as well. Monday and Tuesdays there tends to be less volume. There's pretty much not that much data on the calendar. Likely you're going to be in balance, typically. Wednesday, Thursday, Friday, there's more volume with more tier one data in the calendar. You're more likely to have price movement. You know, it's doesn't need to be complicated, but that's typically how it works. Daniel, I've not really had the time to be honest. I need to maybe at some point spend some time and going through it. The trouble is his is like really catered towards fast markets. I think I don't really trade fast markets. I suppose it's a good way to get in and out of entries, and I can see. Like a skim through it, mate, but nothing. There's it's stuff in general. There's a lot of content he puts out, so um, I can see that you're paying a lot of attention to sweeps. When it sweeps, then you need to be quick, and then you're taking the 3-4 ticks. In essence, what you're doing, right? So we're pretty much just having a chatting stream here because there's absolutely nothing happening right now until we've got 40 minutes till the data comes in, market on close data. So feel free to ask any questions that you have. Let's see if Treasuries has moved. We'll jump across to that. And look at that, not moved. Surprising actually how the book is. Normally it's extremely beefed up at this time. Normally you're like 8 and 10k deep and stuff on the 10 year. It's not normally like this. So, I mean, it goes without saying, this is a completely different strategy here, right? Just by the thickness of the book to the NQ. Do you know what I mean? So, as Daniel was saying there, for example, some people come up with specific strategies that are catered around fast moving markets, more driven towards sweeps and taking small movements out of the market consistently, you know. But just because market cycles change, liquidity changes in products, doesn't mean order flow is shit. I'm astounded that people could say that. Yeah, no problem, mate. I would say that like typically it's 1 hour. 1 hour is the standard, right? First hour of the session. But then check the I think it's the pit trading hours or something. It still goes by. If I remember correctly, think currency futures are slightly different to ES, so just double check to make sure you've got the right time. Because you if you're watching a DOM and it's pre-market and then it goes to open, you'll instantly know the difference, right? And as well when you watch the DOM, if if you've not paid attention to the calendar of what data's coming out, you will instantly know there's data coming out by looking at a DOM because the book just evaporates and both the bid and offer gets pulled and it'll go if it's 100 bids, it will go down to like 10. It'll just evaporate. So even if you don't check fundamentals, which I think you should to a degree, you should always at least know what the Fed is doing if you're trading US markets. You know, I'm not talking about deeply analyzing, every report that comes out. I'm just saying having a general feel. Are they in a hiking cycle at the moment? Are they raising rates or are they cutting? And then another quick tool that you can probably check out is there's a tool in the CME that they provide for free that basically tells you the probability that the Fed is going to cut at the next meeting. Is there going to be no cuts? How much are they going to cut by? And as those percentages change, typically it reflects it in the debt markets, and it will reflect it on the likes of the dollar index and on indices as well. You know, the Fed's decisions literally control the markets, so I think it's good for you. You don't, we're not an analyst here. We're not going through every report, but it's just good to have a general overall idea because if the large players are increasing bets that the Fed is going to be cutting more this year, right? Then that's going to have a lasting effect in the market. So you don't really want to be fading that because you're not going to move the market. You need to go with those guys. You need to go with the path of least resistance. 820. Okay. Eight voltage. Yeah, exactly. I mean, the when regular trading hours comes in for whatever product you trade, A, the market moves more, and B, the book thickens up, right? Like it should be as clear as day. You know, you can notice the difference as soon as it happens in bonds and notes. Instantly, there's more liquidity, and the market moves more. There's more action. And exactly, Maku, you're right. So if you never know that there's an ecom event coming out, and you look at the book, it's extremely obvious. I mean, the 10 year will go from like 4K bid and offered to down sometimes down to like a couple of hundred, or whatever. So what I think would actually be quite interesting. I'm thinking it would be quite cool if we could maybe arrange it at some point. Would be to have like a podcast or something and bring on order flow traders to discuss things. I think that would be quite cool. What do you guys think of that? Either people in the community or some other YouTube people that you guys think are that you guys think. Yeah, I'm roughly the same. Like, it depends. Sometimes I'll be a little bit quicker to it. Depends how the market is. I notice a lot of the time, uh, as you know, treasuries a lot of the time is not as whippy. So if it tends to aggressively lift off, or then you pull back some more, you tend to get a bid off there. Do you know what I mean? It's slightly different, whereas indices, I mean, forget it. It can go up and down, whipperoo around. Yeah, you guys will need to let me know what traders you think it would be a good idea. If we can get something, I think it would be good to create a segment of that. To be honest, if you guys have got any traders or whatever, or you know of any, you know, I think that could be quite something a bit different, right? This is literally market making heaven right now, isn't it? This behavior. Good question. Good question, Jengi. So basically, like any single industry in the world, um, innovation and competition. You know, if one of the larger firms, so say we take Goldman Sachs, DRW, and Citadel, right? Just as an example, one of the big boys basically, has had an algorithm running in a lower environment for a year, right, or testing it. Okay, they then put that into production, um, and they basically start layering the bid and offer differently, uh, and start changing things. And they start doing things that distort the book and basically causes the other algorithms or other big boys to basically either make their life more difficult, okay, and when that then happens, right, and they realize they go through a spell where shit is not working the same, they look at the tape and look at the book in volume and they adapt. Plus, as well, when you throw COVID into the mix, that didn't help either. Uh, so I believe it's just how the market changes, and as well, the market is going up more, so it just doesn't make much sense as to why ES is so thin now, but very very typically, it's it's just competition and innovation. That's just the way it is. And with these guys, they're over the moon, right? Because they can now move the markets with less volume. So they're not having to risk as much anymore, and they can still move the markets. And when one of them does it, they all have to follow because their strategy is now dust. So they then all follow in suit. So it's the exact same reason as if you go to get broadband in your country or where you're from, right? You're probably going to have a look at who is the most competitively priced and who's giving the best service, as an example, and you're going to go with the best one. If someone comes in and offers way below the odds, you're going to go with them, right? Same concept. GK, how's it going, dude? Nice, Daniel. And this, what you guys are saying is how market cycles change. Everything changes. That's the whole point. That it's about, experience and context on the day. You know, if someone consistently makes money doing something, right, more people are going to join that. That's just how it works. And then once that edge is then, we won't call it gone, but there's more people competing in that. The edges become, the margins become thinner, and then people then adapt and change to try and drive some more stuff. That's just how any market works, right? And of course, these large firms, they've got huge economies of scale in there. Um, that retail is never going to get. These guys are paying pennies on a round turn. I can't remember the exact time, but they all gradually completely different. But I don't know if you guys have ever seen. No, I that was like organized chaos. There must have been so much manual error in there and human error in that previous setup. They just literally put stuff in a dumbbell waiter and it would go to someone to start keying it into a computer. And it had to go to clearing and settlement firm. I mean, it's unbelievable how that just operate, man. Nice one, Daniel. That's the way. If you're not getting filled, if you're, as an example, if you're going for one of those sweeps and it's retested and you're looking to get filled and get your 3 4 ticks, if sadly you don't get filled on the first hit, you're cancelling, right? You know, because the objective is that they should be hitting with you as you get filled, so you're instantly 3 4 ticks on, in theory, right? So that you're instantly on side. And if you don't get filled, then sell a V, cancel it. JK, when you see absorption level, do you reset the delta counter to see the buyers coming in? Yeah, exactly, mate. I mean, pretty much with delta, I like to see when it gets to an absorption level, very quickly I can reset it, right? And then it'll just say, so that I'm like, say it gets here and I see 400 here, 400 here, 500 here, right? I very quickly can say, right, there's been 1300 positive delta. I cannot crack the level. We're at a sweep position. Let's see. You know, do I look at these? Not really. It's just an easier graphic for me, so I don't, if I'm not paying that much attention, to be honest. But if you ask me, do I use this in treasuries? No, I don't use this in treasuries. I have this in ES, since it's been thinner, and then I use cumulative delta. I use cumulative delta in everything. I do. Because that's like my morning coffee side of things. Well, not morning coffee, but one of the first things I do when I sit down at the charts is I have a look at delta and say, right, what's happening here? Who's in control? And then I look at key levels, see where the key levels are, previous day high, previous day low. Any data come out that's going to affect it. And then just make some educated guesses and control the downside. That's it. So the market's really thin, so I've not been paying attention to this today. So I don't know what the threshold is to even count as absorption. That's the thing as well. Is it 4 or 500 contracts a day? And the book sticker, you could probably sometimes get 15 1600 contracts. It just depends. And the thing is, and the flip side in treasuries, as an example, ES when it's thinner will do this over, like, probably now they'll do it over something to the tune of 4 to 8 ticks, right? Because it's thinner. In treasuries, you're literally seeing that in a tick. Like, someone will step up and you'll see a literal iceberg of say 10k absorb. You know, And if you don't take it out, then you can maybe fade back into value. But then you've got the correlations working in your favor as well. So it's just, I, I must say this all the time, but the different markets, you know, I can't trade NQ to save my life. Seriously, it gives me heart palpitations just looking at it. Hey, Mikey boy. Yes, mate. We traded just after the factory orders came out. Cracker of a trade, long on the tens. I think it was just below value area high at the time. Took 10 ticks. Uh, went for a cold shower after that. And then the pullback happened on the 30 year, and I took 2 ticks at that, and that was it. That was a session. I actually wasn't going to trade this week, but I maybe stepped in for, like, I think I looked at the screens today for, 30 minutes today. No problem. No, yeah, it was a good. But I'm saying that though, man. Like, Treasury just had to buy something today. Just don't buy the top. And Treasuries, when it has such an aggressive move to one side, it doesn't do anything near like ES, where it can potentially go right back into value and end the day, where it started. Treasuries don't do that. I'm going to give you a stat that you guys probably will be seeing a lot is in the last 3 years in the 10 year, if it's taken the previous day high or low, 75% of the time it's closed in favor above or below the settlement price. So basically, if it takes the previous day high, 75% of the time it will close above the previous day settlement price, which is good stats, to be honest. I think in the last 12 months it's like 88% in the last 12 months. So you better believe if it takes the previous day high, right, I am then looking. If it takes the previous day high, I'm then looking for buying opportunities. If it takes the previous day low, I'm then looking for selling opportunities. As an example, if I'm not already in it, to be honest, because what you want to be doing in treasuries is anticipating that that's going to happen, and you're already in it when it's cracking the low or cracking the high. Exactly, Mike boy. It's a strategy in its own, man. Um, the thing is, you need to know the products you trade like the back of your hand. You know, what's the over the last 3 years? What's the ADR for each day? You know, what's the volume like T minus two of FOMC or CPI events? You know, things like that. What's the overall ADR over the last 12 months or the last 3 years? How much does that vary on, say, the 10 year? All these things are important, you know, and not only does it give you a statistical edge, but then you need your own data trades that you're executing to know your edge well, because then you believe in yourself. If you go through a downturn, you're not shit in the bed, you know. Um, JK, yeah, OrderFlow on Bookmap. I mean, I'm not a major fan of that. To be honest, I think it's extremely overpriced for what it is. Um, I would just take a depth of market over that any day. To be honest, I've got a heat map video that I had put on for Sierra, um, but you can tweak a lot of the thresholds on there, right? So you can tweak when an iceberg happens, when sweeps happen, or stop runs. You can trigger a lot of stuff in there. But the one thing I would say is you need to pay extreme attention to the thresholds that you're setting. I think there's a stream on YouTube. It's free that people can check out. It's a good sort of introductory to Bookmap. It's called Think with Bookmap, and that guy literally has every single setting on. You know, um, it's calling iceberg orders on NQ when it's like there's 4 contracts and shit traded. I'm not joking. So you need to pay real attention to the thresholds if you're looking to go with Bookmap. Um, but I can't remember the last time I checked the price, but I think it's not far off if you take the full package. It's not far off 250, $300 a month, if I'm honest. I don't know if that's slightly overpricing it, but Kyle, how's it going, dude? What's happening, my man? It could be pulled at any moment, but what do you think about the 2000 order at 5386 on ES? 5386. So 86. Let me just see. I've got the 86. So I'm up this way, right? Up here, mate. Or am I the completely wrong way, dude? Now the reason why I'm maybe it's the other way. I know you're probably saying you've not got a lot of depth on there. I don't have the full depth. Um, but if there's no MBO there, then I I don't see how it's even real. Because if there's two, did you say 2,000 contracts? So 2,000 order. Wait, so it's 886, right? So basically, what this tells me, right, is out of that 2,000 order, right, there is not one order in there that is greater than 50 contracts in one clip. So I wouldn't pay any attention. I only like to, if we ignore this shitty bracket algo, if this would disappear, because it really, it's been plaguing my life, this thing on ES. Um, Typically they're not going to just layer out 1,000, 1 or 3 lots in there, or, you know what I mean. So I wouldn't really pay much attention to it. Normally they're going to throw out a couple hundred. Oh, how would I treat it? Right, okay, sorry. Um, okay, so if price gets to it, as long as there's some large size there and price is not miles away from it. If it's miles away from it, then I don't really care. Um, but say for example, it's within range, and I mean within range, something like 15, 20 ticks or something, right? Um, I would then expect it to be going to get filled. Because very simply, you guys have noticed a lot on market on close where they'll just start layering, like on the DOM, ignore this bracket order, but they'll start layering, they'll hit like 100, 100, 100, they'll just start turning them on. I don't know if you guys have seen that, I've seen it a lot on stream. And very typically when they start just layering it out, they're going to get filled up here. So you can, a lot of the time, when they aggressively start layering like that, the market's going to go and fill out. You literally see them turning it on. Um, so if it's not within range, I don't pay any attention to it at all. Because as you said, when it gets into range, um, it can very easily change. Mike, keep your tight stop and look for collation going in favor with delta, looking for daily breaks, highs and lows. Works out exactly. I mean, that's it's kind of the same way I look at it, mate. To be honest. GK, do I trade stocks or just treasuries? I used to trade ES a lot. If you guys hear me saying when the book is like this, I prefer a thicker book, right? I just I prefer it easier to look at markets that absorb and move with less ticks. It's just easier. Just it's I've learned that way. It's the way I've always looked at it, right? Um, and they're slower moving as well. So I would, and sometimes I trade ES, but predominantly it's treasuries, just because it's easier, in my opinion. It's more predictable and readable. But again, if you guys are just new to trading, and this is what you're, this is all you're used to, then then no problem. Just slightly different. But this is where, unless you've been trading for a long time, the market goes through different cycles, different conditions, different books, different liquidity. You need to go through crashes. You need to go through, when the Fed are aggressively hiking. When they're cutting. You need to go through all these different cycles, uh, because nothing is ever the same. And you need to learn to adapt and change. As the competition changes, so do you. You know, it's like, I don't know if you guys have heard. I keep on referring back to poker, but it's so similar to trading. You remember before the Black Friday in the US, right? And the guy Moneymaker, he basically won the World Series of Poker event, and it was a poker boom. And you've got guys that were just going all in with absolute garbage hands. Those were the heydays, where you could just go on and take a fortune against people that couldn't even play the game. As that dissipates, you know, um, over time, the competition gets better because the more people that get into the game or into the industry, the longer they stay, the better they get, the better they improve, and then they work on their edge, and they consistently take money out of it. And eventually, everyone improves. The smucks and guppies will always come in. They'll always be there. It's the way it is in anything. But they will quickly die, and lose their money in 3-4 months, and they're gone. You know. So in order to withstand a long time in the markets, you need to have gone through different cycles and understand what they're like. And of course, none of that even matters if you can't control the downside. You know. Jengi, so when the rate cutting starts, you expecting the bond market to change? No, because the market price is in. So as so the market's super efficient, right? Basically, when news comes out, the market is already anticipating that news and how it's going to affect what's going to happen. That's where you hear on the wires and things like, JP Morgan is now forecasting, more cuts this year, or a 50 basis point cut, or whatever, or Citi is, expecting 125 basis points cut, or whatever the case is, right? Um, but regardless of whatever they're forecasting, they're all forecasting cuts, right? So in essence, what they're trying to do is forecast in what the market or the Fed is likely to do, right? So it's not about right now, are they going to cut? The question is now, by how much, right? So if the market is like treasuries now, the yields are dropping off a cliff, and the treasuries have went extremely bid, right? They're now to the moon. Now, if they come out and they maybe only cut by 25 basis points and say we're not cutting any more this year, the market will take that negatively, right? Just as an example. So this is where you need to pay real attention to um, just where the money is flowing, and how it all comes into play, to be honest. Um, and I would say the Commitment of Traders report is quite good to look at in treasuries as well. Yeah, so very, very, very typically the way I would trade that, mate, is any fades, uh, any fades would need to be a ready and extended day, and then I would then need to be just riding that back in for the 3 and 4 ticks. When the market is extremely one-sided like that in treasuries, you need to be going with it. You need to be going with the path of least resistance, right? Daniel, do you find that missing trades in treasuries because of reaction speed? Good question. Not really, no. I would say that the thing that I struggled with the most in treasuries is just making sure I get filled, because I don't like if I join the queue, say there's 4k on the bid and I want to buy, and I join and I'm 4001. I normally, like, I would rather wait. I would rather get filled um, at the next price and get filled there, because very typically, how do I explain this? If I'm sitting at 4001 on the book, right, and I get filled, normally I'm going to get filled, and they're going to be, it's not going to be great. Do you know what I mean? I'm at the back of the queue, so you need to try and anticipate it more in treasuries. So say for example, on that example, there's 4,000 on the bid, right? You're 4001, and say maybe there's 2,000 in the offer, right? I will wait until they take the 2,000 on the offer, and then wait till they go bid, right? And then try and time the bid so that if they take that, I'll basically queue up on the bids and try and be pretty quick with it, right? If that makes sense, because I would rather do that than set 4001, and then they're lifting into the offer, and then they hit 3k into the bid and pull the other 1k, and I'm left with my dick in my hands. Do you know what I mean? I don't know if that makes sense, me explaining it like that without seeing it on a dom, mate. Right, market on close. I'll answer these questions after. Let's see if we can get some volume here. It doesn't really look like we're missing too much. I've seen a little bit of selling come in. Interesting that we're now net positive on the day, to be honest, delta wise. Just shows you how hard buyers have had to work to do anything. So we can see sellers are still aggressively in control. So when you see this, the offer's strong. Um, so we need to see. I mean, there's going to be a sweep below here. I don't think we're getting down here anymore. Basically, we may get a kind of sweep below this IB here, out of value, and then basically back in. Same to the upside. It's more likely now that we sweep the upside and back in, but this could literally end here, to be honest. We'll see. Interesting, mate. I'll need to have a look at that at some point, dude. It would be great if I could. The thing is, I find hard to Are you talking about completely automating the actual execution? Like, we're not talking like fully automated in terms of I just let the algo run itself, are you? Just meaning about the execution and potentially managing of it, right? Have a good weekend, Mikey boy. Oh, Kel, you talking about the top step one? There's a chap, Scalper is normally in. Let us know. Oh, look for the conditioning one. Just wait. Nice. I need to have a look at that at some point, dude. But see if they end. I mean, what am I expecting, man? It's a Friday after an extremely volatile day. Let's see if they sweep above 80s and then bang it back down. We've basically hit highs on Delta today, but offer is still remaining strong. VWAP has basically been a wall. We've got the initial balance mid line as well. Not that really means anything. It'd be interesting though, Kel, to see what they're doing. There's probably still people on top step actively trading that, to be honest. Okay, Sweeperoo is coming. Let's see if we get it. Let's mark that actually on the DOM quickly. So the sweep high is 82 and a half. 82 and a half. Here. Let's get rid of this line. Don't know what that is. And let's make it green. So cheeky 3-2, 302 sitting here. And then, oh, you see that? Just added a little 687 to it, so they pulled it back. Let's see if they go back up and fill it now. There we go. Okay, so notice the amount of delta has just come in to get past that 3191. You can see them layering this up here. Okay, let's see if we get the sweep right above the tick here, 18 and a half, and then just to end back down at point of control. What are you guys thinking? Do you think we can potentially bust through this, bang it, and close back up here? Interesting. There's a lot of positive delta coming in, but I think they're gradually working out their positions here, to be honest. Didn't even get it all. It's probably the right idea to just take it above the range. Do you see how tight that range is when it's like that, where they're not even taking it? Shows you how much this is a valued price here, or an average price, that they're just taking it out of the extreme a little bit and then back. Let's mark this. This is one of the key levels where some huge size was hit. Okay, 1 minute till we see some actual 700 lot here. Yeah, just working it all out here. Working around, dancing around, nothing crazy. But whatever which way it goes, you know, probably fading back to it. Let's see if we can get a couple of minutes action when this comes in. See if we can work its way back down to 60s. Here we go. So here is the absorption line. And now let's see if they bang it back down to here. Still no real selling coming in, but yet we're going down. It's a good sign for the theory. If they can crack here, this 73s has basically been held up. It needs to break here for us to continue down. Otherwise it looks like we're just going to finish in this range. See how the offer just literally continued on there, staying strong, and working its way back down to, of course, 60s. So let's see if it can continue its way. Really lackluster market on close. Just a shame that it didn't breach above the exact high, I suppose. See if the market fills this here. This 500 lot is sitting. It's just pulled up. Sellers are still not really coming in aggressively anyway. What I mean by that, when the market was moving down there, just the bid was pulled. And you can see instantly, as soon as after the sort of 3 minute mark, the volume dies off a cliff. So that's pretty much all she wrote. No play down to 60s. Probably finish round about this range. Maybe grind their way back down. Seems unlikely that we're going to grind their way higher now. So did you guys take any trades there? Let's see. Did my drawings make any form of sense there? Well, Kyle, for the majority of the day, it was negative 20k. I remember I was checking this at open. It was about negative, I want to say 13k this morning, my time. So it was like 5, 6 a.m. Yeah, 5, 6 a.m. US is already negative 13k. This happened, and I think down here, I want to say it was like negative 30k down over here. And then essentially they have bought this all the way back up to 10k. So that's been 40k delta roughly has been spent positive to get us to here, right? So that's a lot of buying that's had to happen, to do that. So the offer has still been extremely strong. Because with that amount of buying to take us from negative 30 to plus 10k, you'd expect a huge rally. This is, well, kind of looks maybe out of proportion a little bit, you know. But in theory, a lot more money's been spent for not too much happening, right? So this is the magical 73 number. We're below there, so as long as we sort of stay below this, we might see a continual grind back down to 60s. But most likely now we just finish in this kind of range, to be honest. But that's all she wrote for session, to be fair. So how did you guys end the week? Did you have a positive week this one? Was it a good one for the books? Well, I would say you're I, I would say with the fact all this delta here that went up, right, to get us to the space that we've been consumed in here. These guys need to exit the trades, and these guys that were basically doing all the buying here, right? Uh, all of the offer here, right? The offer here was most likely these guys exiting out their positions to close the session. As we know, 95% of the orders are closed the same day. So that is when they work on the. I just like it when they do it a little bit more at the extreme. I've been caught out too many times in trading to not take the extremes. So for me, I suppose when it's this tight of a range like this, any sort of hit of a high like here or potentially here, um, you could probably take. The Trader Boy carried out. Um, but yeah, they're now basically out of their positions, and then a little bit of net selling to potentially drive it back down to 60s. Then they faff around. The algos faff around for the last 40 minutes to close the sesh. Nice, Kyle. Nice, Trader Boy. It's good that you guys had a great week. Nice, Daniel. Good that you I think one of the best skill sets is to realize as well when markets are good for your strategy and when they're not. That in itself is a massive skill set to have. Yeah, trader boy, you love the market on close. Exactly, exactly. Completely agree. Understanding when market conditions are good for you is half the battle. Being it's actually part of the. I suppose we can kind of get rid of these drawings now. Um, one of the I would say parts of the journey for being consistently profitable. I think we covered this in the journal video, but you have you started trading and you basically you can't even beat a coin flip, so you'd be better just going long for heads and short for tails, and then you essentially start understanding slightly what you're doing but still losing money, and then you go and you end up break even, right? And break even is a stage where whether that be small wins, small losses, or big wins and huge losses, or the boom and bust cycle, whatever your style is, still a break even way. And very typically, in order to take you from break even to consistently profitable, you need to remove the large down days and remove the losing parts. It's easier said than done, but you need to spend a lot of time with your journal and running through numbers to do that. And very typically, um, in order to get from just taking a little bit of money at the market to actually being a crusher, is understanding those concepts such as the market is shit at the moment. I'm not going to trade, and being selective. So taking the most out of your winners, being selective is basically the difference um, that it takes. But you really, really need to know the products that you trade well. You need to know your numbers really, really well. Something so small as like how many losing trades do you normally take in a row. You know, if you've got a decent enough sample size to back that up, then you only have that number of losing trades and you're done for the day. You know, it's really small things. In trading, it's actually counterproductive because people think that the more time you spend at the charts, the better you get. Um, and in my opinion, trading is not. You don't make the money actually sitting at the screen grinding the charts. The money is made being patient and actually working on your edge. So instead of grinding for that extra couple hours and looking at charts and trying to come up with trade ideas, you should be working on your edge. Working out statistical probabilities on your specific product that you trade, or working on your journal so that you know what you're like when you behave in a trade. It's a lot of small things, but subtle that take you from being break even to consistently taking money at the market. And the first thing is normally removing the big down days. That's what everyone. I would say that's the most common problem that happens in traders. Nicely done, guys. Nicely done. That's actually a question. What would you guys say is the most important thing that essentially takes you to the next step in your trading? What would you say? Probably had to pick one, but if I put a gun to your head and said you had to pick one, what would you pick? Just like to take you to the next step in your trading. So as part of the trading cycle is being break even, and then in order to go from break even to consistently profitable, what would you say is the number one step that is required? Yeah, just for you guys personally, yeah. Yeah, what do you guys think is the number one thing that uh takes you to that next step? Just interested to see what the sentiment is. Hope I'm making sense here. So, Rosie, self evaluation, knowing how you react when impulse kicks in. Good one. Effectively managing risk, says Trader Boy. Kyle, I think the biggest thing is learning to trade what you see and not what you think you see, and knowing when to get out of a bad trade. So basically, going in, trading what you're seeing instead of having a bias. Don't be stubborn and cut your losses. Like it. Context. Kyle, holding bad trades is my weakness. Completely agree on that one. Daniel, technology, better education help. Go wide instead of deep. Tradable, I know edges in the market. As long as I manage risk accordingly, I can do this. Yeah, exactly. I would say for me, the number one thing out with journaling, because journaling is an absolute given, right? If you're not spending time in your journal, you're just not at your full potential. Very very simply. Um, and if you guys are not using the journal, there's one in the description that you need to have a look at. Uh, for the journaling software, it's free to trial. You can export your shit and put it in, right? But I'm assuming you guys are journaling. Um, but the other things that you need to really, for me, was being selective, okay, and understanding the market conditions for that session. That's it, to be honest. Um, because anyone that does a lot of round turns on ES or NQ, especially if it's micros as well, even more so ES, um, they they pay a shit ton in commissions, right? And commissions are a problem. Like they're a real problem. Um, so people need to, because if you're when you're over trading, imagine you're doing that, you know, just say 1 day a week for the whole trading year or whatever. You're paying a fortune in commissions. That should be in your bottom line. Nice. I'm glad you joined the Trader Boy. It's the way to do it. So you hit yourself in the head with a hammer anytime. I even started to have thought about counter trade. Yeah, I'm with you. Take a cold shower. Get a book and hit yourself in the head. And what I mean by that, you can't squeeze edges indefinitely from one market or go deep, go wide as in trade our markets to the same edge. Yeah, exactly. I completely agree. And I think it's having the ability to adapt and change as well. I think What we discussed on some of the videos that have been released earlier is clearly just people are not adapting to the current market conditions, and realizing that what you do when the bidding offer is 1,000, it's 1,000 bidding offers versus what you do when it's 1340. It's completely different. You know, doesn't take a rocket scientist to work that out, but that's just change. Natural selection is a thing, and especially in trading, because you're literally going to be eaten up. No wonder the stat is that like 80% of people lose money in trading, right? But then the ones that actually do lose money, they typically lose it in a 3 to 5 month period, typically in 3 months. And you need to be a pretty crazy individual to consistently get up and play a game of chance every day and consistently make money from it. That's the crazy part when you actually think about it. Exactly, exactly. I completely agree, Trader Boy. I think focus on being more selective, paying less commissions, and also having a trade window as well. JK, what are the big yellow clips on your chart? Oh, the big bubbles. Ah, you mean these? You mean these guys here, here and here? The blue is buying, the yellow is selling. Basically, that's just a visual representation of large orders that have come in one clip. And by one clip, I mean one order, uno order, right? So I think it's greater than 200 contracts I've got it set in one clip. And what I mean by that is not 200 that's aggregated at price. I mean someone stepping into the market and literally slinging 200 contracts or more in one order. I want to see as a visual representation when they're coming in. Hope that makes sense, dude. Yeah, 99 to 90 rule, exactly. That's a fantastic way to do it. And the sad truth is, if you're actually beating those numbers, you're beating majority of the people, to be honest. And what it really boils down to is just risking too much, especially in futures. And FX and CFDs, they give people so much leverage that really don't know what they're doing and don't know of an edge, don't journal, don't even understand what a Fed cut or Fed hike is, right? Or central bank equivalent for the product they're trading. Um, Google, YouTube, how to trade and find ICT, do their arson, and then wonder why they lose money. You know, and that's the problem as well. I think with these results, I'm being pretty candid here with it and pretty blunt, but the bar, with the barriers to entry in this day and age being so low for trading, no wonder so many people fail. You know what I mean? I mean, you can go to TradingView for free now, start drawing risk to reward things, find ICT, run through his mentorship nonsense. Next thing you're calling yourself a liquidity sweep trader, market manipulation nonsense. Do you know what I mean? Being pretty blunt with it here, but it takes a lot more than that, sadly. The industry's full of a lot of snake oil, you know. really there to target newbies, I think. Oh, he did. I mean, who in the right mind is carrying a trade into NFP? I can tell you one thing: anyone that trades order flow for a period of time is not doing that. You know. Exactly, exactly. And that's why I would recommend you guys, if you can, look into an order routing platform that doesn't have an additional fee. Like our trader has an additional fee, whereas Teton, for example, doesn't. Makes a big difference. Depends on the products you trade as well. Yeah, yeah. I mean, I don't know. I don't know. It's a shame. It's a shame that um the people in trading in this industry and YouTube, where is probably the most content is consumed for trading, a lot of the stuff is garbage. Um, it's a bit of a shame, to be honest. And you know, I completely agree, Tom. You need to get your commissions down if you can. Makes a big difference. What do you guys think of that Iman channel where he just exposes people? He's pretty much carved a niche out for himself. What do you guys think of that? Yeah, I agree, Maku. Yeah, I've watched a few of his I've watched a few of his videos. That one that he did about Apex was hilarious. uh, just checking if you guys can see the cursor. Okay. Yeah, exactly. Exactly. I think so too. Some of his stuff is funny, but that's the thing. It's more entertainment, isn't it, rather than education. And the guys get good editing skills, I would say. So there is little excuse these days to take more than 2 years to go through all the BS. Yeah, exactly. I mean, Daniel, you're right. The resources there's so many good resources these days. Kellyanne. Yeah, I think I've watched one or two of her videos. Um, I know she calls out trades by Matt. I'm still on the fence with trades by Matt, to be honest. A lot of the stuff is weird, man. About that, one of the things that I can never get my head around with that, it's not the fact blowing an account that happens. It's the fact that he lost like 100 grand in a day, and then or in the session, and it somehow the next day just magically has 20 paid accounts. Like, I don't know about you guys, right? But if you're nuking accounts, you like that, you're never going to go and buy 20 of them and then magically pass them. Does that not seem weird? Or am I out of pocket here? Do you think so? I mean, he probably. You think I'm right? I just think, psychologically, there's no danger you losing 100 grand or whatever, and then just whipping up 20 evaluations and passing them for the next session. I think that's lottery fairy tale shit. To be honest with you, um, I think most likely, you know, he speaks. He literally he's the biggest affiliate for Apex. He will literally be texting Daryl and say, "Hey mate, I just slinged it today. Can we get this set up? You know, um, for me to good to go." Do you know what I mean? And he's probably phones one of the girls and said, "Hey, can you just put his account, open up some PA accounts for him?" I don't think they've got anyone live, Daniel. To be honest, mate. JK, did you see Futex there? Yeah, by all means, check the Futex one out. I would say Axie is just rehashing Futex stuff anyway, dude. Martin, how's it going, my friend? Definitely psychologically a bit difficult to deal with and then have to pass straight away. Yeah, I completely agree. I just think it doesn't that doesn't make any sense to me. Um, there's no way that you're in the mental capacity to smash those accounts and then just go and buy 20. Never mind that. Can you imagine the pain of going? It would take you 30 minutes just to buy the 20. I'm not joking. Have you seen how shit the website is? It would take you forever to buy the 20. Never mind go and trade them and go into Sierra and set 20 of them up to copy, and log them into to our trader and stuff. I don't know. I'm not buying it. When you actually think about it, it doesn't make any sense. Today was a crazy day in ES. You're right. So Apex wanted to make him a true funded trader, so he purposely tanked those accounts and had 20 on backup. Oh, you think so? Yeah, the thing is, Daniel, they're not promoting that anywhere. Like it's basically streamer privileges, to be honest. Do you know what I mean? It's not like you can do that or anyone can do that. It took an hour, right? So somehow it took you an hour to buy and set them up, and yet he somehow managed to nuke 20 accounts and then just somehow, supposedly, do all that setting up and then somehow, make 3K or whatever in one session with trailing drawdown as well. So you'd have to be oversized in that position as well. Oh, you think I could have done that? Nah, I don't think so. I don't think so. I think it's more. Tom, if I'm honest with you, on the recent video, no. Nope. Well, he released a video on how to pass a few trades. Wow, that's gonna help Apex. Oh God. TBM, yeah, yeah, yeah. I would not say so, Tom. To be honest, uh, I just thought I just disappointing that recent video. I'm not gonna try and be too salty about it. I just think someone had found really good content for that and kind of showing people the way and really all for it to then compare a Bitcoin chart to order flow. You know, that recent video is basically just a plug for the reclaims on the coffee. That's all that is. Oh, TBT did it live, did it? Wow. I mean, that is a fantastic shill, isn't it? Though, Daniel. You know, hey guys, this is how you do. Passing a couple of trades. You here too can go to Apex and do the exact same. Good marketing. And I bet you the Apex code was absolutely blasted in that video. I've got no idea. I've never watched that Nutty Bar guy. I've never watched him. There's some mafia guy I watched. I want to say in the last week, um, last couple of weeks, and just there's everyone trades NQ. Not that there's anything wrong with that, but they're trading NQ, just looking at candlestick charts and just yeah, I don't know. It's not for me that. I think if you can trade fast markets and you've got an edge at doing it, happy days. But I just don't think it's looking at untested wicks. Put it that way. Yeah, exactly. I think there's a cut off, mate. Where a lot of these guys that are the top, like your Patrick Whelan's, your tradesman Matt, the Nutty Bar guy, I think he's quite a big influencer in the trading space. These guys don't really need they need the accounts to keep the train going. Like they're not making their money from trading. They need to basically continue fueling the content. They've got that much of a viewership that they pump it towards. It's more of an affiliate marketing entertainment setup than actually trading. They don't actually need to trade, but they're doing it to continually pump the content. Hey, would you look at that? Good spot, Tom. It's like I had a crystal ball. Yeah. I just don't think these guys have been trading truly for that long in different conditions, Daniel, because you would know that the summer months is least volume months, and that's the time when breakouts are not, and momentum trading is not as conducive. Yeah, and Patrick Whelan guy's another one as well. And I can't comment on a Nutty Bar guy in Alpine, but I can tell you pretty much that the setup's going to be with these guys is, and the Patrick guy hit the nail on the head, right? He actually was honest about it a couple of years ago, and he said, "Why would I risk my own money in trading when I basically just need to stream charts and get thousands of people to watch me and I make money from YouTube?" That's pretty much what he said, and that is going to be the view of a lot of these people. They'll probably have some accounts and trades, because it's extra money if they do it well, and if they don't, then they don't need to rely on it. That's pretty much the setup, I would say. Exactly, Martin. I mean, that Patrick guy is actually, I don't know if you guys know this, but he's got a company set up that's almost like a prop match, company where you go to it. I've not seen him promoted that much, but I've never on the guy's streams or anything. But he set up basically um, a company that specifically just is affiliates for prop firms. So that's how he makes all his money. And not that there's anything wrong with that, because if you get enough people, you're going to make more money than that and probably trading yourself. It's scalable, right? But I just don't like that these guys truly try and make it look easy. Do you know what I mean? Maybe TBM doesn't. I think his attitude towards trading is quite good. I just don't like all the weird stuff that's happened recently. Um, I just think it's not believable. Yeah, Joseph, that's what I was thinking, dude. I think he just had a bad month. Uh, Truly, to go on there and say order flow is basically bullshit, and it's just weird. I think he had a bad month. I think so. Anyway, he did. You cannot trade order flow for years like that, and then just all of a sudden think it's all fake. Either that, you've only been trading for a couple of years. Do you know what I mean? And you've not been through different market cycles. But I think you've been trading for a while. So, trader boy, no problem. Have a good weekend, dude. Dan, you were thinking about what? Did streaming or YouTubing? Oh, you streamed. It'll be because Apex would not dare deny my payout with my evidence as a YouTuber. Um, the one thing I would say, mate, is I'm relatively new to this stuff, and I've traded for many years. I would say um, it's really hard to chat to all you guys, analyze order flow, um, and trade at the same time because one has to give. You can't be kind of entertaining and chat and manage a trade and analyze the order flow. Do you know what I mean? I've just been doing this for that long that I can come up and understand the context and I've been doing it, but to throw in a trade in there and manage it and stuff, it would be difficult, to be honest. He did. Wow. Wow. Is it? I thought he pulled out of some cup thing. I don't know if did he win it or whatever. I thought that was a while ago, mate. Good for him. Has anyone checked the pit? Is that the trading pit or something? Is that a prop firm you're referring to, dude? Yeah, exactly, mate. Exactly. That's the trouble. Is it's hard. No, I've not seen that at all, Maku. Jesus, man, that's a lot of trades, dude. The thing is, if you're so on the ball when you're doing that, I'm telling you now, there is no danger you can execute that many trades, mate. Really concentrate and look after a chat and stuff. There's just no way. It's you know it's hard to be keep up with things, watch the book. You know, I think you're doing more northern style, aren't you, Daniel? In and out 3-4 ticks type. You know, Daniel was discussing this, I think, a while back, where he basically, I think he trades fast markets like NQ, waits for sweeps to happen on the DOM, I'll limit them back in, and I'll try and take 3-4 ticks loads of times. Low chart, 3 DOMs, alert automated that plays events in a DOM. Oh, nice. Oh, so you've got a bit of automation in there, or 9 how's it going? 90% ES, some on Q. Okay. All right. So mostly yes. I suppose you might as well yes if it's that thin as well at the moment. Nice, nice. Yeah, I mean, by all means, mate, if you know, have a crack at it, but I would say it's not easy. I don't know how you are at editing and stuff as well. Suppose if you can edit, it would probably help. If you want to do it just to help you keep accountable, I suppose it could maybe work, but it's very difficult to do everything at once, especially for a complicated strategy as well, where right. So you'd put the dots or bubbles on the DOM directly. Right, I'm with you. As you can do that, I take you've got a coding background, did a little bit of development programming in your previous lives. Right, I'm with you. That makes sense. In light of what you're saying there, dude, I just don't know how you would manage to stream that. You know, it's, you know, put it this way, it's definitely going to take away from your trades. Like you know what I mean? There's no way that you can do your trading, and be better at trading, while managing chats and YouTube and stuff like that. But am I seeing that? Why was it 1,800 contracts traded there at this time? Yeah, I think it's if you've got a pretty simplistic strategy, and you're not reading any order flow and stuff, and you're just, I don't know, markets coming to untested wick, or just basic stuff, it would be no problem, and you're maybe taking 2 or 3 trades a day or something. But when you're having to explain stuff, it's people are inherently curious, so they ask loads of questions, just the way the world is. And I do the same when I'm on people streams and things. Um, and it's hard for the person to manage all of that. But yeah, exactly. I'd probably try it one on one, see how you go, and you know, and I struggle to keep up with this when there's a yeah, exactly. And that's the thing, mate. Where maybe it makes sense, to just press the record button, and then you put them up post, you know, and then maybe talk over them or something. That probably works better than actually having to do it live, because the main trouble is you end up doing it live, you add extra pressure onto it, and you can't be entertaining, because you're having to focus on your trades. Well, I think the way that I would probably recommend you do that, mate, is if you want to dig into YouTube. Yeah, am I missing this here? Is there thousands of contracts been traded here? I like to call this washing when you see it like that. I would say, mate, the easiest way to do it is probably to record it, just be silent and focus on your trades, and then most just then take the video and then talk over it and then put it up. That would probably make more sense. Yeah, exactly. And I've really noticed as well. I mean, there's maybe what about 30 or 40 people come into the stream, which is great. Um, and I even struggle sometimes to keep up with the chat. I can't imagine what it'd be like with hundreds, you know. But we built up a good community so far, which is very nice. Great bunch. Managed to avoid a lot of ICT traders as well, which is good. I would welcome them with open arms, as long as they don't start saying turtle soups and things. Well, that was the reason as well for me doing it, Daniel. To be honest, was trying to, you know, there was a real lack of order flow content, right? And everyone knows that you don't really, look at the amount of influencers that we've seen in the past that pretty much post a laptop with a Ferrari, and they're a nomad and they travel around and buy stocks or FX or whatever, and make it out to be so easy, you know. One of the classic ones you guys have probably heard of, that Foos guy, Foos Trading. He's now selling like algo bots and stuff. You know what I mean? The guy's been completely done full circle. That guy. He's one of the dudes from years ago. Exactly, and that's the reason, Daniel, why I kind of tried to get involved as well. Um, try and curb the bullshit. Oh, he moved to Dubai, did he? Yeah, exactly, exactly. That's precisely why I went round that. It's just not a huge amount of, you know, when you've been doing this shit for years, the amount of, you know, people that put up like here's support and resistance with the MACD and RSI or whatever, or go and add these three trading view indicators and click buy and sell, or you know what I mean? It's just complete clickbait newbie nonsense. And normally it's accompanied by I made thousands and thousands of trading this week, or do you know what I mean? It's just nonsense. And anyone who's done this for a while knows it's really hard. Yeah, exactly, Pike. That's the way to do it. Those Astro effects did went down the pan. One of them is a proper wow. Yeah, exactly. You need the market. I mean, this is the thing. You either mean revert and the market ranges and you do well, or you're a trend dude and then the market trends, you make a killing, yeah? Look at that, right back to POC. And the stuff as well that is pretty good for futures and trading and whatnot, it's like 8 years old, like John Grady stuff. That's probably, he's probably put out some of the best content I would say, and it's really outdated. You know, Fat Cat stuff is it's okay as well. He drags on a little bit. Yeah, exactly, Ants. That's the way. They range majority of time, so you just got to adapt to the different conditions. Oh yeah, Jigsaw guy, Peter Davies. Yep, he's a good dude as well. Well, I've watched some of his stuff in the past. I thought it was quite good. If I'm honest with you, when I first watched it, I was in fits because he reminded me of the guy from Napoleon Dynamite. You guys have seen Napoleon Dynamite? Um, you know the was the brother from Napoleon Dynamite? You know what I'm talking about when he's got the visor and stuff on. It literally reminded me of him. So I first was attracted to that because I thought it was funny. And I watched some of his stuff and I was like, this is actually pretty good. But some of his stuff is out of pocket, with the smashing his chest doing hypnosis and stuff. I mean, come on, seriously. God, I've seen some of them. Oh, honestly, I mean, good luck to the chat. Exactly. Different strokes for different folks, man. That's the way it is. So, Pike, pretty much what you'll find is in thinner markets, likes of gold, they're not getting all out in one tick. They'll basically start layering out on the way up. Um, so say the market's going up, they'll get out of the ask all the way up, and then they'll get to a level, and then they'll maybe go all out right before it. They'll absorb, then they maybe have enough to be net short. It also works in the favour if they give a little bang before it, just to take some more stops, and then it'll just fade back in, as an example. Would you look at that weird algo washing at the end there? Thousands of contracts traded, yet nothing moved. Very weird. Futures to options switch maybe, potentially. Clearing off the book. Yeah, no, exactly. There is so many different ways to cut it, man. That's the thing. And realistically, it all comes down just to different. As long as you can adhere to the plan and adhere to something on a day-to-day basis and schedule that you enjoy to trade and you can again adhere to it, it's half the battle. But I think a lot of people just pick NQ and then Nasdaq and just roll with it because that's what everyone else trades. Do you know what I mean? They don't really spend the time discovering different products, understanding different market conditions, and just you know putting the time to actually find out what truly suits them. So that's half the battle, I would say. But anyways, guys, let me know if you get any other questions. It's Friday, market's closed. But, you know, as much as I'd like the market to move right now, I can't really make it move. uh, yep. There's a million ways to cut it. That's the thing. Realistically, it's more about the journaling and you as a person and how you manage the positions. Strategy is of course important because you can't, fit a square into a round hole, but it takes a while. That's the thing. Thanks, Maku. No problem, dude. Thanks, Kel. You guys have a great weekend. We'll catch up on Monday. Hopefully, everyone has a fantastic weekend. Peace, everyone. Take care.